Hey everyone, welcome back to Finance Flicks Hub. Today, I'm diving into one of the hottest investment trends of 2025, the explosive demand for data centers driven by the AI revolution. We're talking about a massive wave of investment, with top hyperscalers like Amazon, Microsoft, and Google pouring over $500 billion this year alone into building semiconductor infrastructure, chip fabrication, and AI model training facilities. That's right, data centers are the backbone of the AI boom, and while everyone's chasing the shiny semiconductor stocks and tech giants, I'm here to shine a light on three under-the-radar, construction-based companies that are absolutely vital to this build-out. These are the picks and shovels plays of the AI revolution, and they're set to see some serious financial gains. Let's jump right in. First up, we've got DuPont, trading under the ticker DD. Now, this isn't the kind of name that's splashing across CNBC or Bloomberg, and that's exactly why it's so intriguing. DuPont supplies critical materials like plastics, concrete, and specialty chemicals that are the building blocks of infrastructure projects, including data centers. Right now, it's trading at just 78% of its 52-week high, which screams potential undervaluation. With data center demand skyrocketing and supply struggling to keep up, DuPont is poised to be a key player in filling that gap. Wall Street's starting to catch on. The consensus rates DuPont as a moderate buy with the price target around $88 per share, but here's the kicker, an analyst from the Royal Bank of Canada recently slapped a $94 price target on it, implying a 35% upside. If DuPont breaks its 52-week high, watch out, momentum-driven institutional funds could pile in, creating a bullish surge. While there's no specific press release tying DuPont to a data center project, its materials are essential for early-stage construction. Plus, the industrial sector, tracked by the XLI ETF, has doubled the S&P 500's performance over the past 6 months, fueled by billions in government spending on infrastructure and onshoring data centers. DuPont's positioned to close that valuation gap and deliver for investors looking for long-term upside. Next, let's talk about Marietta Materials, ticker MLM. This company is a heavyweight in supplying foundational materials like aggregates and cement, the stuff you need before you can even think about laying a data center's foundation. MLM is trading at an impressive 95% of its 52-week high, and that bullish price action is no accident. The market's rewarding MLM because it's first in line to get paid on these massive projects. Before DuPont's chemicals or plastics come into play, Marietta's materials are already on site, driving revenue and earnings growth. Institutional investors are taking notice. Geo Capital has an $831 million position in MLM as of August 2025. This isn't a household name, which is why retail investors have a chance to get in before it becomes too hot. If MLM breaks its 52-week high, expect more institutional buyers to jump in, pushing the stock even higher. And here's the thing, this isn't a short-term play. Data center construction is a multi-year endeavor. Look at Intel's semiconductor fabs, still unfinished since 2022. MLM set for sustained growth as demand keeps climbing, making it a must-watch for savvy investors. Finally, we've got Caterpillar, ticker CAT. A name you might not immediately connect to data centers, but trust me, it's a key player. Trading at 90% of its 52-week high, Caterpillar sits between DuPont and MLM in terms of price action. This company supplies the heavy machinery, bulldozers, excavators, you name it, that turns raw materials into actual data center structures. Marietta gets paid first for the materials, then Caterpillar rolls in with the equipment to get the job done. Despite a recent earnings report that wasn't a home run, the stock held strong, which tells me the market's looking ahead. Analysts are bullish, with JP Morgan forecasting a 35% upside, even though the consensus price target is around $444 per share. Caterpillar's massive market share and economies of scale make it unmatched in meeting the huge demand for construction equipment. But wait, there's more. Caterpillar's also riding the wave of surging investment in gold and lithium mining. With lithium prices up double digits in the past month due to China halting 75% of global supply, mining companies are expanding, and they need Caterpillar's gear. Lithium's critical for chips and AI models, tying this stock right back to the data center story. Plus, Caterpillar's part of the XLI Industrial ETF, which is crushing the S&P 500, reinforcing its strength across multiple sectors. So, why should you care about these three companies? DuPont, Martin Marietta, and Caterpillar are the unsung heroes of the data center build-out, yet they're not grabbing headlines like the big AI names. That's what makes them such compelling opportunities. With hyperscalers spending $500 billion this year and data center construction set to continue for years, these stocks offer serious long-term upside. The XLI ETF's outperformance is a big clue. The market's already rewarding these industrials. And for those looking to diversify, check out our free premium article on marketbeat.com. It's got a list of 5 ETFs focused on AI and energy infrastructure, perfect for capturing this trend. Just scan the QR code or click the link in the description to grab it for free. Before I wrap up, I want to hear from you. Are you eyeing other companies that could benefit from the data center boom or related sectors like mining? Drop your picks in the comments. I'd love to see what you're watching. Thanks for tuning in, and as always, happy investing.